The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hello everybody, this is Coach D with TackleTrading.com, here to give you a market update and recap. Pretty interesting day here on the S&P index. If we take a quick look at it, we've got inside candle. The market ended up finishing down. It had rallied a little bit during the day and consolidated intraday. And it's got a bit of an inside candle here. Now when you look at this on an intraday chart, what you'll see here is that the market at the, let's zoom in here and kind of look at the last little bit. From the market open, it actually rallied up and consolidated in. Let me get it down to around a 15-minute time frame or so we can really get a look at that. And really kind of focus on the market went into a little consolidation pattern in here. And if you kind of get a good ballpark, it broke to the downside after that intraday consolidation. It really could have gone either way. Now that it's broken down, what I really see here is a two-wave pattern at this point in time. I talked this morning about the first move down. We've got a corrective move up, and then we've got a whole nother leg down. So that can technically count as an ABC, a down one, up two, down three type pattern heading into tomorrow. And if you really kind of sit and look at where it's sitting, it's coming right down into the intraday support resistance zone. And then the question you have to ask is, well, can it maintain this intraday trend zone, trend angle? So it'll be interesting to watch how this market plays out. And let me back this back out into the daily time frame. And really what you're looking at right here is not that different than, say, what you see back right here. So if you kind of get a look at this inside candle right there, you see it came into a bottom. The market popped, gave a nice little two-candle rally, and then an inside candle. It came down to where the old candle high became the new lows, and then it took off. So it's in that zone where the old candle high, the old resistance, could become the new support. We could see it rally and take off from here, which won't be surprising. We could also see it break to the downside, and what you'd see is, instead of being let's drop this back out to that, say 30-minute time frame, let's go hourly so we can get a nice look at it. It could end up turning into an inverted cup and handle if you see it continue down and testing those support zones, and that could become a big breakdown zone. Or again, this could become the zone that holds, and we could see it rally out of here in this trend zone. Now, a lot of that's really going to come down to how it trades overnight. Typically what we expect is for it to drift sideways, and I don't see a lot of action. Normally we see a little bit of sideways action during quiet time as all the international markets are closed, and then as Asian markets go live, you'll see some activity pick up. As European markets go live, you'll see activities pick up, and we can spot those time zones. If you come back in here to Tackle Trading, we go into the Trade Center. You can go grab those time frames by going and clicking on the Forex calendar. Let's check out our economic calendar and see what we have coming up on the docket for tomorrow. This could really be the catalyst for what the market ends up doing tomorrow. So we've got, heading into Wednesday, we've got some ISM manufacturing information coming out. And I know we've got some of the members of the Fed speaking, which can always be a catalyst, even though it's not an official announcement. They can always create some market movement, so something to be aware of there. Bigger information comes out on Thursday as we see international trade, jobless claims. The big unemployment report, the monthly that comes out the first Friday of every month, is the unemployment report, the non-farms payroll report. So the end of this week is really when we'll see the strongest news and information, and that can either be a rallying call for the market, or it could be the catalyst that helps it break down. So we'll keep an eye on it. My key price points right now are 2050, and reason for 2050 is, let me go here to the drawings and remove all those drawings. Let's go ahead and get rid of those. And let me just go grab a Fibonacci retracement, and when you see a breakout and a retracement back down, old resistance will often become new support, but it can dip as low, really, in my opinion, as low as the 76.4, but I'd feel stronger if it stays above the 61.8, which puts you down at 2050. So old resistance support zone, 2050 becomes a key zone, and then beyond that, I'm going to be watching that 2035 zone support. And if we see a breakdown there, that could really be a much more bearish indication on the market. But for now, me personally, I'm maintaining a cautiously bullish outlook, really kind of looking to these numbers that are coming out, particularly the non-farms payroll, the jobs report, unemployment rate. That'll be a strong piece of information for the market and could end up ultimately being our catalyst for the market moving up and or down. This is Coach D with TackleTrading.com. We look forward to seeing you in the clubhouse, and watch for more trading strategies, ideas, content, and information.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.